I took legislation to Parliament to raise the limit of the junior market from $500 million Jamaican to $750 million. And I know, yeah. And I know the general manager came back because there's a little step more she thinks we need to take. So we will try to sort that out, Madam General Manager. We want to encourage more companies to list, because listing brings with it an opening up of investment opportunities to ordinary Jamaicans and increase access to capital for those companies that list. The junior market, if my calculation is correct, has delivered compounded annual return of 22% despite the ups and downs since 2009, approximately. No man, we can't talk more than that. That's a good rate of return. Compounded annual rate of return on average. And we've seen 2 companies graduate to the main market, which is the outcome that we want to see. And I know that your general manager, the general manager of the stock exchange, has been impressing on this government, particularly me, the need for a micro market and legislation for REIT product, real estate investment trust product. And so I don't know if the chairman is here of the stock exchange. I want to say to him, I don't believe that Mrs. Street Forest, Dr. Street Forest, will admit to office before this happens. So get ready for her to continue staying around. So Dr. Street Forest has asked me to speak about transforming government assets into wealth for the people. And I know that generally persons think of hard assets. And as a government, we do have a robust program of divestments and PPP, public-private partnerships. On PPPs, we're closing off on the Rio Cobre PPP, which is a project, when it is done, will take millions of gallons of water into Kingston. And that was government and the private sector. Several others are under development and include a portfolio of courthouses, expansion of Sudbury wastewater treatment plant, North Coast Highway expansion. For divestments, I hope you will excuse me if I only speak in generalities, but I want to say that we do have a deliberate plan to list assets on the stock exchange, and we are in the process of preparing for sale the 20% residual GOJ ownership in Trans Jamaica. We're also going to do the Jamaica Mortgage Bank and Port Authority's BPO assets. And for further information, you will have to visit the DBJ's website or call Denise Arana, who knows all about this. But I want you to know as well that government assets are not only hard assets. Assets also include the power of legislation. Among the other legislative changes, I mentioned the junior market I took to Parliament last week was the amendment of the corporate income tax for energy companies, in particular, those companies that are known as power purchase producers. Even though they are regulated companies and are subject to the 33 1/3 corporate tax rate, their tax rate will be, their corporate income tax rate will be 25% if they produce 75% or more of their energy from wind and or solar. So we're incentivizing that. I also took to Parliament last week legislation to codify the corporate income tax rate for companies providing trust and or corporate services and are not engaged in other activities. And even though those companies are regulated companies, they'll be regulated by the FSC, we're saying to those companies, we want to encourage this industry in Jamaica. And so we're granting you corporate income tax rate of 25% instead of the 33 and the 30% for regulated. JSE, which is the Jamaica International Financial Services Act, you heard the Prime Minister talk about that last night. There is still some remaining legislative work that has to be done to get the limited and the general partnership legislation passed. Other parts, such as the segregated account law, that's already in place. And so you can see step by step, we are putting the pieces in place to fully enable the Jamaica International Financial Services to thrive in Jamaica. And because it's been so long, we have to go back to 2011, when the authority was established, with a goal to promote Jamaica as a jurisdiction for international financial and business services. The mandate is centered on stimulating economic growth and encouraging investments within the Jamaican economy. We want to encourage multinationals to establish entities in Jamaica, which will provide financial and business services to the export market and own assets in other jurisdictions. Efforts have included creating a robust and sophisticated legislative framework, formulating a competitive tax regime, and taking steps to ensure that the domestic market, relevant institutions, and agencies are fully prepared to ensure the center operates efficiently, to take advantage of the ensuing opportunities, and that our jurisdiction remains transparent. Again, I know it has taken quite some time to put the legislative framework in place, having had to ensure that we dot the I's and cross the T's with regards to the global AML CFT standards, which is the anti-money laundering, countering financing of terrorism standards. But as a government, we've kept at it, and with the certainty that we have brought to the corporate income tax regime, you can see that we're committed to success of such an industry in Jamaica. Yeah, I hear a little faint clap. So the Prime Minister gave all of us a comprehensive overview of the Jamaican economy last night and confirmed this government's commitment to fiscal prudence while pivoting to the next chapter of Jamaica's inclusive growth agenda, powered by Aspire framework. And just to remind you what Aspire means, the A in it stands for access to economic opportunity for all. That's the inclusive growth. Because if you recall, there was a time in the independent history of Jamaica, when we had certain industries that were growing robustly. We had GDP growth, 6, 7, 8, 9%, but it was concentrated in a few industries. And so when we talk about inclusive growth, we want to see more broad-based growth in Jamaica. So the S in Aspire would be safety and security. P would be people, which is human capital development. The I is the infrastructure development, not just roads, but buildings and communities and all of that. And of course, the Prime Minister stressed last night as well, the reform of bureaucracy so that it becomes easier to do business. So he spoke to the ease, the speed, and cost of doing business. And then lastly, it's the economic diversification and new industries. And certainly the stock exchange is an enabler of that. So how do we engineer sustained and higher levels of economic growth, which we all desire? Well, first, in my opinion, with the financial discipline we have embedded in the budget process, We have to ensure that Jamaica has the ability to recover quickly once we're hit by a natural or other disasters, because we know that these disasters subtract from our GDP growth and that it takes time to recover. So if you hear me dwelling on that, it is with good reason, meaning dwelling on what we have done to ensure that we have buffers in our budget process. It's because we realize that we are located in a hurricane-prone part of the world. No secret, but we've taken deliberate steps to ensure that Jamaica has financial buffers to allow us to recover quickly and build back better. I know all of you here understand that every year there's a hurricane season. But the important thing that a government can do for its people is to ensure that we have the resources to recover quickly and, as I say, build back better. So just a few days ago, I wrote a letter to one of our important multilateral partners, who has been a partner in helping Jamaica build financial resilience to weather-related events in the economy. And so I said, dear President so-and-so, Jamaica has fared well in navigating the ever-evolving economic landscape following the global upheaval caused by the COVID-19 pandemic. Over the past fiscal year, Jamaica has achieved notable economic milestones, including enhancing fiscal resilience, continuing the downward trajectory of the public debt to gross domestic product, and improving the investment environment. Key economic sectors, particularly tourism, continue to perform well, exceeding pre-pandemic levels and driving balanced growth across the economy. I'm sure you recall that the country's creditworthiness has been further validated by the upgrades from Standard & Poor's and Moody's, signaling increased international confidence in Jamaica's financial stability and fiscal policy. And I want to remind you that there was a landmark liability management operation in the third quarter of fiscal year 23-24, which was the issuance of an oversubscribed Jamaican dollar-linked bond in the international capital markets. Who ever thought that Jamaica would get to that point? First of its kind within the Caribbean community. And this success bolsters Jamaica's debt management capabilities and showcased its increased credit desirability. But despite all the work that we have done, it can be wiped away in an instance by natural disasters. All of us here this morning know this. And so in this regard, the government must maintain and continuously improve the country's strategic, multi-layered disaster risk financing suite of instruments in order to mitigate the fiscal impact of natural disasters. And if this does not sound sexy to you, it really gets me going. Because when you have to think about budgets and the risk to budgets, it's a comfort to know that we have this plan in place. You know that the recent Category 4 Hurricane Beryl in July last year was followed by Tropical Storm Raphael, which was followed by probably the longest period of daily rains ever. But despite all of that, despite all the natural disasters in 2024, I'm here today to let you know that yesterday I took to Parliament a supplementary budget to the end of this fiscal year, which will end on March 31st, 2025. and we are projecting a balanced budget for the fiscal year 2024-25 in keeping with our fiscal rules of having a fiscal balance of 0.3% of GDP. And we also expect that by the end of this fiscal year, which will end, as I said, March 31st, 2025, that our debt to GDP will fall below 70% to 68.8%. We have to go back to 1996 to see this kind of low for the Jamaican economy. And so this morning, my word for the Jamaican economy, the Jamaican people, and Jamaican businesses, my word is resilience. We've taken a lot, but we've been able to recover quickly and move on. And we could not have done this without having the National Natural Disaster Risk Financing Policy. And I know I brought one slide to show you on this, or two. It is in place. It's one thing to write a policy, but it's another thing to fund a policy. And I want to tell you that this policy has been significantly funded by this government. We have experienced and demonstrated the wisdom of having cushion to our budgets. So we have certainty regarding our response in time of disaster. So that is just a screenshot of the page at the Ministry of Finance and the Public Service. If you go there, you can read all about our National Natural Disaster Risk Financing Policy and how we structure it. So disaster risk financing is about putting in place a menu of financing instruments that the government can readily access to respond to natural disasters. And this should give all Jamaicans, all investors in our stock markets, persons and entities looking to invest in Jamaica, it should give them comfort that the government has this ability, the built-in buffer to our budgets to give us the ability to respond swiftly. And so this disaster risk financing utilizes the concept of risk layering, because no single financial instrument, if you could put up the other slide, can efficiently address all the risks. Risk layering and timeline of funding needs are the fundamental concepts underlying the policy. We consider the frequency and the vulnerability of the event. So in this regard, the government can access different resources in order to build disaster resilience and provide financing at each stage of the disaster response process, because you know those stages are relief, recovery, and reconstruction. And with that slide there, it shows you exactly what we have in place. For low risk, meaning local floods, landslides, we have contingencies in the budget, reserves, annual budget allocation. We can deal with those are local. We can allocate away from something that we can delay, we can make those moves at that stage, at that level, the low risk layer. When you get up higher into the medium risk layer, where you have floods, minor earthquakes, we have to tap into the contingent lines of credit. And then when you get even higher, the large earthquakes, the tropical storms, the hurricanes, like Hurricane Beryl, then you talk about insurance, risk transfer to insurance instruments. And in particular, we access the market for catastrophe bonds. Recently, twice now, we've done that. And again, for me, this is something amazing that I would not have thought Jamaica, sitting in the hurricane belt, would be able to access. But we've done it. We've utilized parametric insurance, as you know, ahead of time. It says, okay, if these conditions are met, then it's almost immediate, financing of that. So I'm taking the time again to go through this because I want it to become a part of your thought process as you think about Jamaica, opportunities for investment here, and what happens during those periods. How is the government situated to respond to disasters, which will inevitably happen in our part of the world? So back in May of last year, the World Bank settled a catastrophe bond issued on behalf of Jamaica in the amount of US $150 million. In the event of a named storm, insurance payout to Jamaica will be triggered once the storm meets the criteria. So on, this forms part, like I said, of the government's multi-layered disaster risk financing strategy. And we've since renewed the bond that was issued earlier, and the one in place right now is scheduled to mature in 2027. And of course, we will evaluate as we go along. And we continue to have a facility as well from the Caribbean Catastrophe Risk Insurance Facility, CREF, in addition to contingency funds and National Disaster Fund. Again, it speaks to prudence in our financial and our fiscal management, ensuring that we have a good foundation for debt sustainability and enable the Jamaican economy to, take comfort as we go through these adverse impacts. So, bottom line, the government remains steadfast on this path, especially in terms of disaster management and recovery. So I hope you walk away this morning with that in place. Looking forward, we have hope, a lot of hope, despite some uncertainties around global tariffs and other issues. And if you put up the other slide, we can, one of the reasons we have that hope in the global world is that according to the IMF, they are projecting that a record low share of companies is expected to be in recession in 2025 and 2026. And you can see the green is positive growth, and I did not choose the colors. The orange is negative growth. And of course, the last big orange line there in 2020, you know that was COVID. But look at 2025, 2026. You can barely see, negative growth. So that's a good backdrop for us here in Jamaica. The government is making significant strides in its commitment to strengthen the enabling environment for private sector development. We are big on digital adoption. We have an ambitious reform agenda to promote the development of the digital economy. We have data protection laws in place in order to provide greater safeguards for the handling of the personal information of our citizens by requiring systems to be in place to protect data privacy and to create resources in case of failures or breaches by incumbent and future operators. And I know all about this because I piloted through the Parliament the Data Protection Act, and you know that we have been bringing the different entities online we've been bringing them into operation as of March of last year. So already we have 161 data controllers registered with the Office of the Information Commissioner, and the communication around it has been happening. Government acknowledges the essential role of a resilient financial sector in sustaining economic growth, fostering financial inclusion, and protecting against systemic disruptions. So in alignment with Jamaica's commitment to prudent fiscal management and economic stability, we continue to ensure that the legislative agenda continues as well. And I know I have a lot more, but I'm going to end here by saying that I can say with confidence that this government reaffirms its commitment to achieving sustained economic resilience and stability in the face of whatever global challenges there are. And recall that at the top of my speech, I said I wrote a letter to one of our international partners to continue partnering with us on our disaster risk financing pathway to build more resilience in our budget process. And I am sure, absolutely sure, they stand ready to help. And so I ended the letter, as anyone would do, by saying, yours sincerely, Honorable Fable Williams, Member of Parliament, Minister of Finance and the Public Service. Thank you, ladies and gentlemen.
Questions while she's there.
Testing. Testing. Quick announcement. The following cars are blocking: Honda Fit, Toyota Camry, Toyota Prado 7765. Camry's license plate is 4225 HP, and the Toyota Hiace MOH 304479. Please remove your cars now.
All right. Good morning, everyone. The Honorable Fable Williams, Minister of Finance and the Public Service, the very first female Minister of Finance Jamaica's ever had. Can we have a round of applause? As my friend and colleague Sean would have highlighted, the Minister is not only a CFA charter holder, not only Wharton MBA, not only Harvard undergrad, but the Minister is also ex-C-suite from one of Jamaica's largest financial institutions. Why is that important? Ladies and gentlemen, it is important because not only do we have a Minister of Finance that is more qualified than the majority of us, but she is also a market practitioner and now has the economy of Jamaica under her control. So, Minister, Minister, you have an opportunity where you are both very academically qualified, but also a market practitioner, which means that you can see the scenario from both ends, the public sector and the private sector. The government of Jamaica will not continue to be a serial issuer as the past. and therefore the private sector will have to find new assets to feed off of, so to speak. The ministry, the government are doing all the right things with the changes to the junior market, but also this divestiture program, which will supply the market with assets going forward. Having sight of all of this, Minister, and you understand some of the restrictions, limitations, abilities of the private sector, what are you expecting from the private sector, given that the government of Jamaica is laying the groundwork for the future of the capital markets?
Well, I'm expecting to see more companies list on the stock exchange. It's opening up opportunities for ordinary Jamaicans to invest as well in the market. I expect them to do, large capital raising, to look for assets probably overseas in the region so they can expand. Because unless businesses grow, hire on more people, unless we get into new industries, we're not going to see that robust growth that we all desire. So we want our companies in Jamaica to become large, big companies that can take on the region and take on the world, if you will.
Okay, thank you, Minister. Before I hand it over to Sean, Minister, you've inherited a desk where the debt to GDP is now in the 60s, where the government has more reserves than they've ever had before, probably some of the largest in CARICOM now. But Minister, we're also in an election year. How do you strike the right balance between continuing the prudence in terms of the management of the country, but also understanding that the benefits from the improved macroeconomic metrics filtering down to the man on the street? How do you strike the right balance where that is concerned?
Well, I'm going to go back to what the Prime Minister said last night. He did say we are not a run-with-it government. We still commit to fiscal prudence. At the same time, we look for ways to share, to ensure that Jamaicans benefit from the improvements in the economy. And you've seen it in terms of social housing. You've seen the many different care programs that are out there. We have a suite of social programs that are administered through different ministries to help those who are most needy. So we will go, when we go to the voters, we're going on our performance. There are many things to which we can point that we have done to improve the Jamaican economy, and many things that we can point to that we have done that have been improving the lives of persons in Jamaica, and we can stand on that record anywhere, anytime.
Thank you. Picking up on that remark from Agnes, could you quantify, possibly, maybe I shared this earlier, as part of program, would you be able to quantify in terms any expenditure that program may require? The first question, and the second question, could you summarize foreign direct investment last year and for the upcoming fiscal year, any major foreign direct investment opportunities that you see coming into the island, and how local companies can look to partner or participate with some of these investments coming up?
Well, the one that I meant with regards to your second question, the PPP I mentioned, that involved local and international persons. And again, that was a significant deal that will ensure that the city of Kingston and St. Andrew have access to greater water supply in the coming years when the project gets underway. As to other specifics, again, I can only stick to the script that I have this morning about our plans to list assets on the stock exchange, and the ones that are already in the public domain, which is a Trans Jamaica assets and so on.
Great. Thank you very much. Are we opening up the floor to questions at this time?
Just before we go forward, Sean, Minister, and there's going to be a shameful plug. We spoke about the divestment of your 20% in Trans Jamaica. We also spoke of the divestment of the Port Authority's BPO assets. So I'm very proud to say that NCB Capital Markets has been mandated on those transactions. So I know you mentioned the DBJ to make contact, but I'm very proud to say that NCB Capital Markets has secured those transactions and will bring those assets to market.
Thank you, NCB.
My question to you is that there are very significant liquidity events taking place in 2025 from the Ministry of Finance. And do you think the debt management unit, for example, in the ministry would have been be very intentional in terms of how we synchronize the government bringing these transactions to market with these liquidity events taking place?
Absolutely, and I've met with the debt management unit, and that's something they talk about all the time. They do communicate with the Bank of Jamaica, with players in the market to understand the needs that are there, to understand the liquidity situations. I have every confidence that they will coordinate, triangulate when these deals are being done.
So the ministry is extremely synchronized.
Yes.
Thank you.
A question on the floor?
Thank you. Thank you very much, Angus. Honorable Minister, please congratulations. Your Prime Minister last night announced that you were a brand new finance minister. Your Prime Minister last night talked about the exchange rate and about the stability of the exchange rate. I'm from Guyana. I'm one of the 5 directors of the Sovereign Wealth Fund in Guyana. But apart from that, I've been investing in Jamaica through the stock exchange since 1999. When I did my first investment in Jamaica, it had to do with Carriage Cement and TCL. At that time, the exchange rate was to the US dollar was 40.75 or whatever it was. But let's say 41. I have a portfolio in Jamaica now since 1999. And if I were to try to convert that portfolio, the exchange rate is 157 roughly. Let's say 157, 159. I think as an overseas investor, the metric of the foreign exchange is an important element. I would therefore like to know if you have just abandoned the whole question of getting the exchange rate. If you have just abandoned the whole question of the exchange rate, or what are your plans, government plans, as it relates to address this whole question of the exchange rate?
By the applause, it tells me that there's a lot of interest in this topic. You heard the Prime Minister say as well that there is very little restriction on persons being able to transact in US dollars, given the nature of our market. The purview of the exchange rate rests with our Bank of Jamaica, who assesses the environment. You know that Jamaica is a country in which we We buy a lot from overseas. We're not yet a net exporter. I know that the Minister of Industry and Commerce has been going around talking with businesses to get them to export. So we will be able to be in a better position. But for right now, in terms of our currency, we look at the percentage each year in terms of what it does rather than the absolute number. And when you look at the level of depreciation over the period of this government, it's been quite less than we've seen in other periods of time. We are proud to know that foreign exchange is available to businesses and to individuals to carry out their business. We know within the Caribbean this is not so. There are other countries where you have to get permission before you can transact in US dollars. We have a freer environment than that. And I guess on the flip side is the fact that we have had to endure some annual depreciation of the currency.
Good morning, everyone. Congratulations, Madam Finance Minister. It's such a pleasure to see a woman holding that position. For persons who would have come to this Stock Exchange conference for the last 10 years, you may be familiar with my face. I did significant research on the governance public debt nexus, a case study of Jamaica looking at Jamaica, Barbados, and Singapore since the 1960s. And as I listened to the Prime Minister last night and I watched what Dr. Nigel Clark has done so far, your predecessor, Madam Finance Minister, I'm delighted to see the trajectory that we're on as a nation. My question to you is, in terms of economic diversification, we have been leaning on tourism quite a bit and we saw what happened during the pandemic. What are our plans for diversifying the economy and getting the economy growing, because that is the main area of focus right now as we go forward?
I agree with you that the traditional industries that we know have been the ones primarily responsible for growth: tourism, agriculture. We do have manufacturing, we do have the financial sector and others in the economy if you look at our list of industry sectors. But I agree with you that we need new industries, new areas of growth in the economy. We are looking to our financial sector to help us to get out there, to bring new companies to market in the Jamaican area. As we digitize our economy, we have great hopes for the technology sector. So those are the things that we're putting in place. You heard me talk this morning as well about the trust and corporate services. It's not on our radar yet in terms of the performance in that sector. And we know when we look at other countries that is a huge industry in some of our countries in the Caribbean that we can tap into as well. So those are some of the areas that we're looking into, but we've had to spend time to get the legislation right. We've had to spend time to ensure that we have a certain level of digitization in the economy, and we have to keep working on this in order to create that environment that will attract those types of companies. But we are doing what we can do as a government, which is to ensure the legislation is there, to ensure that we have an environment that encourages technology in the workplace, in our schools, and that our citizens are, fully okay with technology, not just the social media technology, but how to use it in the workplace, how to use it in other areas. So in time, and we're hoping not too long down the road, we will begin to see the fruits of some of those efforts begin to, come to the fore. Thank you.
Leon Frantic, I'm a private investor and Minister of Favor on behalf of Trinidad and Tobago. I do acknowledge your reference in terms of foreign currency restrictions, right? But just to sharpen the point raised by the previous question a while ago, can you indicate, given that Jamaica is projected to be entering a recession as of the fourth quarter 2024, can you indicate what pointed measures or amendments to fiscal policy are being implemented now or since then in order to ensure a strong and sustained recovery? And secondly, the second question is with regards to the disaster risk bond. Last year when we had Beryl, the damage was just below the payout parameters of that bond. I know you mentioned that there have been some renewals in those bonds. Have there been any amendments to the terms and conditions of these bonds so we don't have a repeat of being stuck in that blind spot again? Thanks.
All right, with regards to your query about the economy in the second quarter and the this December quarter, remember that the decline in GDP is primarily, if I could say, all due to natural disaster. Beryl took down most of our industries: agriculture, mining and quarrying, manufacturing, if you look at the numbers. And so our third calendar quarter ended September was a negative 3.5%. We are expecting to see recovery in the December quarter. It might not be the strongest yet because we're still, in the aftermath of all of that. And let me remind you, it was Beryl, it was Raphael, it was rains, it was travel advisory, it was lots of things that hit us in 2024. And yet, we are here saying to the Jamaican people, for this fiscal year, which will end March 31st, 2025, we can still say to you that we have met our fiscal rules with regards to our fiscal balance. And that speaks to just proper management, good management of our fiscal affairs. And during that time, we were able to call on, while we were not able to call on the disaster risk bond, the CAT bonds, there are other instruments and other areas that provided financing for us. And if you recall the chart I put up on the screen, the different layers, because we know that some of these disasters will have high intensity, others will have low intensity, which we can manage from our budgets. And so we have layered it that way in order to have the confidence to know that when disasters happen, we can manage from them. So that is what I would say on that. Despite the fact that the CAT bond did not provide any financial resources, but then in order for it to do so, you'd have had to have devastation. And we continue to refine that product, the different layers. And in the letter that I wrote to our multinational partners, it was to do precisely that, to look at what we have currently, to see where the gaps are, and to ask for assistance to fill those gaps.
So just to confirm, the takeaway from what you're saying, Minister Williams, is that because the economic decline that we're currently in is largely due to unfavorable weather and natural disaster, there are no amendments to fiscal policy at this time, right? As a result.
When you say amendments, what do you mean?
Or any revised policy, any changes, anything new being contemplated now to facilitate growth? You're saying that it's basically going to correct itself, so there is no input needed from the Ministry of Finance?
No, that's not what I'm saying. We did have to put input into the process. If you recall, just going back to my days at the Ministry of Education and Youth, many of our schools, over 100 of them, were severely damaged. We could not have looked to our budget to repair those schools and bring them back online. We had to call on either the contingency fund that we had in place or other funding that we had in place to be able to bring those schools back in an 8-week period. The education sector opened without a hitch on September 2nd. We could not have done that otherwise if we hadn't put this policy in place and funded the policy that allowed us to call on those different layers of funding. So I don't want you to take it simply. We're here saying, for this year, our budget is in order. We are not saying we have to go look for financing in order to fill some gap. It's significant what has happened during this fiscal year. So it's important, right? So in the first place, you want to ensure that when your economy is hit, you're able to come back online quickly and begin the restoration of the economy. And that is important for us in Jamaica.
I think we have time for one more question. Of the mindful of the minister's time.
No, understand, Sean. David Rose. So, first critical question. So you mentioned the plan to sell 20% stake that GOJ holds in TJH to NROC to the market by up for sale. Your contemporary, former Finance Minister Dr. Nigel Clark, had actually mentioned that there was a plan to transfer the shares in JPS, so Jamaica Power and TJH, into a SPV and then list on the JSE. Is that strategy no longer going to be considered?
Okay, so we've taken Trans Jamaica out of that because, as you may be aware, the JPS license has to be negotiated. That may take a long time to get done, I don't know. And so we felt that it was not prudent to sit waiting with these other assets that were ready to go. And so that's why we've taken it out.
These divestments, do bring capital towards the government to help fund budgetary expenditures and support capital expenditure. What is the amount that the government is looking towards in terms of raising from the sale of the BPO assets from the Port Authority and the NROC shares?
I'm going to defer to our financial manager.
Thank you, Minister. So David, there are some preliminary numbers that we have in mind. What we have to take in consideration are different things like appetite, conditions, current exposures. I think what we could share today is that the government of Jamaica is intent on divesting their full 20% of Trans-Jamaica Highway, which sits under NROC at this point in time.
Or what's the size? That's real.
20% of TGH.
No, the value of that site between the Port Authority and TJH.
So TJH is a publicly traded share. So I think it's a simple calculation and may run you about 9 billion J, give or take.
And Port Authority?
So that's not a public share, and that is a transaction that requires work where calculating intrinsic valuations is concerned. So we won't be able to quote that size transaction at this point in time.
Just to ask one more question, it's important to the entire room. Minister, your contemporary mentioned the removal of asset tax in the future, or even the potential reduction. I know that this year is an election year, and that might not come to the fore right now, but is the government still interested in reducing the asset tax on the regulated entities to make it more harmonious for financial players to operate in Jamaica?
I know that the former Minister of Finance and the Public Service had given a commitment, and we continue to abide by that commitment. The timing of it, though, is a kind of important question here. So as our budgets gets as our budgets get stronger, I am sure at that time, we will be considering.
Thanks,
But it's a
Minister.
commitment.
Thanks, Minister.
Thank you for the question. Well, nothing gets me as excited as talking about yield spreads and valuations as well. So we could sit here and continue for the rest of the day, but I want to thank the Minister for sharing her generous time with us this morning and wish you continued success.
Thank you so much. Thank you, everyone.
Thank you very much, Minister.
There is a transition.
And
We're moving
also
into the other
Sean and
segment
Angus.
of the conference. The Honorable
Our next
Kate
moderator
Williams, Minister of Finance for Jamaica,
is
has
Mr.
just
Ricardo Williams,
completed her speech.
Vice President,
She was a keynote speaker for today.
Asset
The
Management
next
and Research
segment is moving
at
to
Barita
now. Thank you for
Investments.
joining
He will come forward and he will introduce our next presenter. Ricardo? Just before Ricardo comes up, there are some vehicles outside that need to be removed. Honda Fit 8963KA, Toyota Camry 4225 HP, Toyota Prado 7765 GU, and a Toyota Hiace, Ministry of Health 304479. Ricardo? Morning, colleagues, friends. Welcome. Today we are going to discuss managing your portfolio in a difficult economy, maximizing returns. And just thinking about this topic, if we bring our minds back many years ago, it might dawn on us that there has never really been a year that we don't contemplate the difficulties that actually arise in an economy. And therefore, the setting for this particular session really is one that, the Tuesday is quite appropriate here. It is one of the best of times and at the same time, one of the worst of times. It is an unusual confluence. We're seeing a very strong US dollar. Some have characterized it as being unusually resilient in an interest rate cutting cycle. The ebullient growth that we're seeing in the US is also quite interesting. It goes contrary to many of our expectations, dating back as early as 2023 when recession probabilities were north of 80%, and those have come down to almost 40%. No, not quite the same thing in Europe. So it's quite an enigmatic juncture which we are, and we have a very interesting presenter to wade us through these particular difficult concepts. Is Mr. John Stolfus, Managing Director and Chief Investment Strategist at Oppenheimer. I will not go through his very extensive resumes actually in your conference bio, except to say that he is a 40-year veteran. I tell him if he doesn't quite look it, and he was telling me in secret just now that the only thing that he overindulges in is a little bit of eating. I tell him he doesn't look it either. So please note your questions. We will take them at the end. And without further ado, John.
Here, I'll take the mic. I might break it. Let's see if I might break into song. You know, I might start out with New York, New York, since that's where I come from. Well, I want to say it's a pleasure and an honor to be speaking here at the JSE 20th anniversary. As Chief Investment Strategist of Oppenheimer and Company, I've had the good fortune to be at Oppenheimer for nearly 13 years now in the process of a career that will be something like 42 years on Wall Street, sometime between May and July. I can't quite remember when I first reported to a job on Wall Street. I just remember it was a beautiful day, sometime between May and July. I'd have to go back to my FINRA records, I think, to get an idea what the actual date was. So I've been through every boom, bust, and recovery cycle since 1983. When I got into the market, Paul Volcker was in his second term. He was battling record high inflation in the United States that at that time had reached such high levels that the 10-year US Treasury had actually fallen in price so significantly that it was priced to yield almost 16%. Now, we never went through that in the most recent inflation cycle in the US. I think we peaked at around 9.3% around March of 2022 when Jerome Powell moved the Fed from being behind the curve in terms of judging inflation and when it would dissipate coming out of the pandemic, and went into action in what we would call a hike cycle mode, which went on for the next 2+ years until we reached last year in September was the first cut. It was 50 basis points or half of 1%. And then 2 subsequent cuts of 25 bips each, or a quarter of 1% in November, and again in December. So the real question is, when we look at things, what's important, we believe, is putting things in context. I'm pleased to tell you that in 2022, when the S&P fell dramatically, because a lot of people were expecting that the high inflation and the Fed's policy to tighten rates would cause a deep recession. We said no recession, and we believed the Fed would be successful. And indeed, there was no recession in 2022. Going into 2023, in December of 22, we set a price target that was positive for the S&P, looking for it to appreciate. I don't recall what it was, but I know we were, if not the highest, we were one of the highest on the street, but I think we were the highest on the street. People thought we were nuts. 23 turned out to be a great year. Subsequently, at the end of 2023, looking at 2024, the recession crowd was back again. The Fed is going to fail. Inflation will defeat the Fed. They'll have to raise rates if we go into a recession. Well, I don't know about you, but I didn't find a recession last year, and there wasn't. And then so far in 2025, we really think it's the elements in the market, and there are many professionals in the market who really want the Fed to cut rates. Many of those people are involved in highly leveraged trading ends of the investment business. There's nothing wrong with that. But it's just that it's inconvenient for them that the Fed has raised rates from a band of 0 to 0.25 to now, as I recall, 4.5 to 4.75 is where we are right now, as I recall. So when you look at this, really we think the operative word that I've heard from both your Prime Minister and your Minister of Finance and Industrial Growth of resilience really lives and resonates with us. In fact, we've been talking about saying the operative word for the US is resilience in print since sometime in 2023, as I recall. It's tough being a bull, let me tell you. I'm dragged out of the press so often. I do have allies in the press who appreciate our work, but I'm usually, I was under deposition or something oftentimes. when they ask me. Now with that, I will say this is the disclaimer which always comes with this, is I'm not making a recommendation to any one individual or any one institution here today to do what I say, okay? We offer it for your consideration. That said, I advise professional advisors and money managers in the United States and around the world, and they advise their clients based on their clients' needs and objectives, and in the case of fund managers, their mandate to which they operate under. I'm big on stocks. That's one of the reasons why I love the JSE and those great 2 years when it outperformed the whole world. It was marvelous. I look forward to seeing more of that in the future. Our viewpoint right now in terms of by the way, so what happened, you might be thinking, well, if this guy had these price targets and was so positive in 22, 23, 24, what did he say in 24 about 25? Well, in December of 25, first I'll tell you what happened in 24. We entered 24 with a price target for the S&P of 5,200. It was the highest on the street. Very shortly, by January, we were tied with another strategist, as I recall, for 5,200. It was exceeded, that target, in March of last year. At that point, we practiced our discipline, was we waited until the market closed at. If it goes through our target during the day, we don't do anything about it. But if it closes at or above our target, that's when we address, will we need to leave it where it is, saying that the market might not go higher, do we lower it, do we raise it? So what happened in March is we went to 5,500. Once again, we were the highest on the street. People thought we were nuts. And then, as I recall, sometime around July, it broke through 5,500. We went to 5,900. And we held that until, it must have been November or December, when we went to 6,200. We didn't get 6,200. I think 62 may very be possible over the course of through the end of this month, or maybe in February, or sometime in the first quarter at any rate. But that said, the market closed last year, I recall, around 59.80 or something like that, so we were pretty close. That said, where do we base this on? It's not me sticking my thumb in my mouth and putting it up in the air and say, where's the wind blowing? We look at economic data, we look at revenue and earnings growth of the S&P 500, and also mid caps and small caps. Mid caps are doing much better. Small caps still have a way to catch up. But the large caps have outperformed expectations now in quarterly earnings over the course of at least the last 4 quarters, and are in the process of doing it right now. Very often, the press, and I respect the press, my father was a journalist, and I have many friends in the press, but very often the press doesn't mention what the current earnings season is doing. Right now, this week we are seeing many companies across sectors, so not just tech, outperforming analysts' expectations. Now that's not uncommon, by the way, because quite often analysts put up their expectations, then they drop them just before they go into earnings seasons. It gives an opportunity for companies to outperform, but it usually is not egregious cuts. It's just legitimate, giving a little bit of wiggle room to their numbers. But as of last week, when we looked at it, earnings growth was, for the S&P 500, looked like it was poised to exceed the 7% earnings growth for this, for the fourth quarter of last year, which is being reported right now. And technology earnings were up 50%. Now, just a few companies had reported, and there's about 40 companies, or less than 10% of the S&P 500. So I don't expect those levels will be maintained throughout when companies that don't do as well are mixed in with the winners. We'll have to see how that works. But again, the resilience, and what's causing this resilience, we believe, is Fed policy. Counter to many people on Wall Street, we think the Fed is doing a good job. We think the Fed, under the policy of Jerome Powell, has been remarkably sensitive in practicing its dual mandate. The Fed's mandate is relatively simple, but on a $28 trillion economy, it is remarkably complex to affect. It requires a lot of economists putting on their hats and reading not just the tea leaves, but the economic data, which today I believe is a much higher quality than what it was 42 years ago. In a digitalized society, things are really quick and are discounted quickly. And so the Fed has done the job. What's that dual mandate effectively? It is to nurture a sustainable growth in the US economy without causing untoward levels of inflation to come to exist. They want to keep inflation down. The second half of it is to have full employment, which is defined by the economists at the Fed. Over the years, it used to be 4%, but since the first Trump administration, and then again in the Biden administration, full employment is also recognized as unemployment at 3% to 4%. Now, why is that? It allows for changes that people make in their decisions when they quit a job, or if a company doesn't like them, or if a company changes policy and is reducing employment at certain levels of employment and adding in other areas. It allows for the dynamics in the labor market. So we think the Fed is doing a good job. We think the consumer has been remarkably resilient. A lot of people said at the beginning of 2024, you don't want to buy consumer discretionary stocks. The shoppers are going to be crushed by inflation. Shoppers are going to be crushed by the recession that's coming. Well, inflation was stickier than expected, and we didn't get a recession. Job growth continued at a slower pace as the Fed had been raising rates, so there was a little bit of caution in hiring, and businesses that had overhired during the pandemic and coming out of it, so they didn't have need to just keep growing at the same pace. And the US consumer, I have found over the last 40 years, when times are good, and they feel flush, the American consumer spends like a sailor who's been on a long-term tour of duty and suddenly finds themselves with a shore leave. They go to town and spend. On the other hand, when times are tough, the American consumer, right or wrong, however you want to consider that, the American consumer keeps spending, though, at a lesser pace, and they buy discounted products, they buy private label products, they watch what they do, but they like to spend, as most of us do around the world, I'm sure here in Jamaica as well, because it gives us confidence that whatever we're doing for the business that we're in, we're able to provide for our families, that we're able to give some joy and leisure fun in the process. So it turned out, by the way, that consumer discretionary was one of the best sectors last year. And so thank you very much, I appreciate that. So what we find is we continue to believe this year will be a year that will reward cyclicals versus defensives. We still do own some defensive sectors, things like utilities and healthcare, but our favorite sectors remain information technology, communication services, which is a sector of the S&P 500 that's about 70 or 80% technology. It's the search engines, it's the social media, it's the streamers, okay, the big names. Then we like consumer discretionary, continue to like that. We think as job growth continues to be on a good pace in the US, people will keep shopping. In addition to that, we like industrials. The US is big on the industrial sector. We think we're going to be building a lot of equipment to do a lot of the building of plants for chips, and also for medical products that are needed from a national security point of view. We also think roadways, old infrastructure being rebuilt, much like here. The plans are very similar, parallel in many ways. And then we also like the financial sector, because as we move towards a normalization of interest rates, that's the end of free money, because once you've got a lot of people, they want rates to come down. But where we are today with the 10-year, which is traded pretty much in a range to yield somewhere between as low as around 3.25 to as high as nearly 5%, and intraday has hit 5% again most recently. What happens is at 5%, that's when the buyers come in and knock down the yield and bring up the price on the 10-year note. And we think that over the course of the next 12 months, we'll likely see the 10-year remain in that fairly broad range. We mentioned that last year when we were talking to people and they thought we were nuts, and that has been the range. We also think that oil will vacillate depending upon geopolitical risk, the time it takes to unroll policy that President Trump says he's going to go, what is it, pump, baby pump, or whatever it is. Drill, baby drill, there we go. At any rate, so what we would have to say is we do think that this economy in the US keeps growing, and we think it'll be good for its allies. Another area that we are very different in than many strategists. Many strategists say it's the end of globalization. We think it's re-globalization as the world, and it's already started since 2016, and it's continued forward through COVID. The world diversifies away from all roads lead to China. The dependency upon China for imported goods is going to be lessened. Some of the reasons are just practical, has to do with logistics. It also has to do with ideology and China policy from President Xi that isn't always the friendliest for business people around the world and other countries. In addition to that, we think it's going to be terrific for countries like Jamaica. Mexico has already benefited. Mexico had lost a tremendous amount of business in terms, in terms of its maquiladoras over the years. China just undercut it. Now it's maquiladoras are cranking, and we think, by the way, Trump's threat of 25% or whatever it is tariffs will likely not come to fruition because both Mexico and Canada depend upon us, and guess what? The US depends on them. And so we think it's a negotiation point. We do think his words about fentanyl and trying to close the borders so that we close off the fentanyl that is indeed destroying many of our youth and even older people. It's a dangerous drug. We think that will likely, a lot of the bark is worse than the bark is worse than the bite, so to speak. When it comes to this, it's a negotiation point. So we'll have to see how things work out. I'm looking forward to your questions. I think I've got about 1 minute left to roll on this before we open it up for questions. And would say this once again, a pleasure to be with you. And so nice, you know, I always enjoy hearing the Prime Minister and the Minister of Finance and Industry. It's just a terrific thing. This is a marvelous country. I wish you well, and I hope to be back next year. And right now, I'm looking forward to your questions, because I knew what I was going to say, but I have no idea what you're going to ask. So I'm curious. Thank you.
All right, thank you, John. That certainly was interesting. I'm going to use moderator's privilege to get the ball rolling. So one question that jumped to mind, John, is a curious omission, I would say. In your presentation, you described monetary policy as effectively the anchor that has been sustaining the strong growth that we've been seeing. But one of the interesting elements that we have seen as well across both Biden and Trump's administration is what I'll call the resurgence of industrial policy via the fiscal stimulus, which some indicate has been sustaining the investment returns. And speaking from the perspective of Jamaica, industrial policy or using fiscal policy to prop up the economy is something that has not necessarily been seen in a positive light, so to speak. So the question that I have for you is, one, how do we incorporate the fiscal element, specifically in the context of the US, in forecasting and anticipating expected returns across various asset classes going forward? That's one. And two, any observations that you might want to make locally in terms of how we can use fiscal policy in a more deliberate way to move the growth agenda forward.
Oh, yes. I thought we were going to do point counterpoint there. That mic wasn't live. Okay, so good, great question. And I think the first thing is, if anything, one of the reasons why I like the industrial sector is for all the building that has been committed in terms of what we're planning to do, but we've got to see the money spent. And I think it needs to be spent because it's very important. It also encompasses innovation. If you think of the industrial sector, it's power generation, both alternative and traditional equipment. It is also defense stocks in terms of military equipment, and there the advancement of military equipment to include things like drones and lasers and things like that. In addition to that, it's robotics, very much so. Industrials are also very much a part, just in home appliances. Think of all the things that talk to you today that didn't talk to you before. I'll never forget a couple of weeks ago, I was somewhere traveling, and there was something wrong with my phone, and I was talking to Siri. The problem was she wasn't smart enough yet to answer my question. She kept telling me, push this button and you'll see a certain screen. And I said, Siri, my screen is dark. Light up my screen, and she couldn't get that. But I do believe that, here in this country, I just think you're on the right track. When I listen to both speakers from your government that I got to listen to yesterday and this morning, the imperative really is to prepare the labor force for changes that will make the country more attractive to investment and position it with greater competitive ability, a competitive edge. And I think that what's going to happen, and I'm not, believe me, I'm not in Washington, D.C. I'm not a political animal, I'm a market animal. But from what I can see from the market is most certainly considering the possibility here that more things will work out than not in terms of growing these economies, whether it's the US economy, whether it is Jamaica, whether it is Mexico. Europe will have to get itself together. They've been battling with each other for 1,200 years, and for all the ECB and everything, it's still problematic. But there's many things happening around the world that show there's a good chance that revenue growth and earnings growth for corporations and job growth will continue in a new world where innovation creates opportunity, and that's what we think.
All right, thank you for that, John. All right, 1 minute to go.
Whereas John has responded to
one
the question
last
about
one very
fiscal
quickly.
policy to stimulate the
John,
economy
in terms of
is concerned,
the
I would have expected
the normalization of the interest rate cycle,
reduction of
which we
interest
spoke
rates
about,
and
has also
possible
led to a very
fillip or stimulus
interesting
that can
dynamic
give
in the
to
market
the
as well.
economy in terms of
Some has
manufacturers
characterized
that
it
would want
as
to
the
borrow money to
resurgence
expand
of
their businesses or to
active
start
portfolio
new
management,
businesses in terms of
using
innovation,
stock
etc.
pillars
So I would have
have
wanted them
returned
to address
because
it in
interest rates are no
relation to falling
longer at
interest
the
rates
zero lower
and
bound.
the availability of those
The
funds.
question I
I would have
have for
also
you,
wanted to hear an
which I'm sure
answer
can help the
questions about the
audience, is
sustenance
in
of
terms of the
those lower
construction
interest
of their
rates so that
portfolios.
if somebody, for
How
example,
should they
borrows
think
at a
about
particular
active
rate, then they
portfolio
would have
management versus
sort of a
passive?
forward
Should I
planning
just
for
go
5 years or
ETF,
longer
or should I
at that
think
interest rate
about
to
picking
make
some
sure
of
that they can
those
get the kind of
strong
returns
names
that
in
they
the
expect.
sectors that you have identified? How can you balance that with?
Well, I think depending upon one's experience in investing and what one's tolerance to risk is, whether or what one's mandate is in terms of institutions, we think it's important to have professional advice, at very least as a sounding board in making your decisions. But in addition to that, from the 100,000 foot level, or even I come down to as low as about 5,000 feet approaching the landing strip, I would say really what we need to consider is diversification is key. The wonderful thing about change and markets and economies that are in transition is that you get all kinds of rotations and rebalancings that occur during a period of transition, because it's a period of uncertainty. Counter to the belief that markets don't like uncertainty, if markets are composed of traders and intermediate to longer term investors, they actually do like uncertainty, because that's when the opportunities become the most dramatic sometimes, and even just become the most enjoyable and easy to take advantage of. For example, for traders, if all of a sudden it looks like there's uncertainty on interest rates, there's an opportunity for them to get into the bond market and do all kinds of things. But it creates opportunities if bonds get cheaper for bond buyers to buy bonds. Similar with stocks. Many times the babies that get thrown out with the bathwater in a downdraft in the stock market create opportunities for investors to buy stocks that just a few weeks or a few months ago were too expensive to consider. So our thing is time in the market, we think, is more important than trying to time the market, but traders will do what traders will do, and traders provide liquidity in the market. If we were all intermediate to longer term investors, it's hard to get a bid or an ask because no one would want to sell or buy anything. Everybody would have what they wanted. So I do believe diversification is important. We also like dividends, and we do believe that stocks remain, for intermediate to long-term investors, they remain the most attractive area for intermediate to longer-term investors. And bonds are most certainly highly complementary to diversify a portfolio and create current income along with dividends. Thank you very much. I'm told I got to stop, so I thank you very much for the honor to be here today. It's a pleasure.
Thank you, John. And absence of persons queuing up meant that you were crystal clear. And thank you as well, audience, for tuning in.
Good job, guys. Thank you, John. Speaking as usual, just off the top of his head, and completely comfortable with the material, and it's really knowledgeable. Good presentation. Our next session is entitled "Making Your Money Work for You." Not coincidentally, the tagline of one of our sponsors. And I invite the next moderator, Kevin McIntosh, to introduce the next presenter.
Morning, everyone. Protocols observed. It is my pleasure to welcome you to this session of the 20th Annual JSE Investment Conference, titled Make Your Money Work for You, Investment in 2025 and Beyond. My name is Kevin McIntosh, and I'm the Assurance and Advisory Partner at Signature Creed and Associates. As we begin 2025, the financial and investment landscape is set for a significant transformation. Over the years, strong foundations have been laid to enhance the resilience and competitiveness and growth of our markets, and these developments now create a perfect opportunity for investors to leverage these foundations and unlock transformational growth. Today's session will focus on understanding the key foundations and how they position the investment space for new investments, from robust regulatory frameworks like Basel III and the Twin Peaks model to the continued convergence of public and private markets. Jamaica stands at the forefront of becoming a regional hub for financial innovation and growth. We are fortunate to have with us Mr. Robert Small Ferguson, the Chief Executive Officer of Barita Investments Limited. Mr. Ferguson's leadership and strategic insights have played a pivotal role in advancing Jamaican landscape. In addition to his corporate role, he serves in key capacities to include the President of the Jamaica Securities Dealers Association and the Director of the Jamaica Stock Exchange. In today's session, we'll explore the foundations laid to foster growth and resilience in the investment landscape, the transformational impact of regulatory frameworks, and the strategic opportunities for investors to generate wealth and navigate the changes ahead. It is my honor to invite Mr. Ferguson to the stage to share his insights on this pivotal topic in today's presentation. Thank you.
Good morning, everyone. I hope you guys have been having a great conference so far. Our presentation, hoping that it comes up. In JSE. Right, so I think I can start in terms of just giving the background of what I'm here to speak about, right? Kevin gave an overview, and I don't want to have the title of my presentation in the program be misleading, but my objective today is to really speak more so about the necessary foundations, that should be in place, and to speak a bit about what has happened and the context that exists in Jamaica that really sets us up for a transformational time with respect to both growth and investment. Right? So even after that introduction, I've not seen my presentation. I hope it comes up. Right? I wasn't prepared to speak as extemporaneously as John did. I was telling somebody outside that that's what 40 plus years in the business allows you to do. Here we go. Fantastic. I now have some cheers competing with me, but that's fine. Hopefully you can see most of the presentation. So the presentation is broken into moving on the way. I live there never. Great. I even do my own setup, right? So the presentation is going to be broken into 3 segments. The first is to speak about the institutional environment that anchors long-term returns, right? Because that's what we're looking for, sustained returns. Right? The second is to speak about the current economic dynamics, as I said, that set up Jamaica to really be that mecca for growth and investment in the Caribbean in particular. And the third is to bring it all together. Right? So I'm starting with a quote, which is from Douglas North, who is a Nobel laureate in economics. Right? And he said that institutions provide the incentive structure for the economy. As that structure evolves, it shapes direction of economic change towards growth, stagnation, or decline. Right? And obviously, I'm going to be speaking today about the foundations that have shaped our economy towards a future of growth. Right? So the first thing I want to talk about really centers around kind of 4 things in terms of a confluence of factors that have set us up for this growth. One thing I'm going to spend a little time talking about is the regulatory environment, right? New regulations, new regulatory structures, the impending Twin Peaks model, which is a material change in the regulatory framework for the financial services sector. We'll talk about the implementation of Basel III, which is a hot topic all over the world, right? And Jamaica is facing it. I'm going to speak a bit about the state of fiscal stability, right? And those who are more qualified to speak on that have gone before me. But suffice to say, Jamaica is in a place it has never been in before, certainly post-independence, where all our fiscal indicators, on balance, are trending in the right direction. We have experienced programmatic deleveraging, is what I call it, right? I'm going to speak a bit about the maturity of our institutions, the fact that we have entrenched fiscal discipline. We've instituted the Fiscal Commission, the fact that our central bank is now independent, right? And the continued stability and pragmatism that we have seen in both our fiscal and monetary policy. All of these are the bedrock of a well-functioning economy, a well-functioning investment landscape, and it drives confidence. Right? It anchors confidence in both the real economy, and businesses will make decisions to expand. It drives confidence in the investor pools, and it drives investment sentiment, so people will invest. And it drives overarching sentiment for those looking on from overseas. Many people are here today, right, who can accelerate our own organic means to grow. So let me talk a bit about Twin Peaks, certainly from the perspective of being a market practitioner, and as Kevin said earlier, I'm the president of the Jamaica Securities Dealers Association. In January of 2023, the government announced that Jamaica was going to adopt a Twin Peaks regulatory model. Now, under this model, the Bank of Jamaica is intended to be the prudential regulator for both the banking sector, which it currently regulates, and all of the non-banking sector, sections of which it doesn't regulate from a prudential perspective. The Financial Services Commission is intended to now be restructured to focus as the authority on conduct, which really is around consumer protection. And while we do have conduct-related regulations now, there is certainly intended to be an expansion of that regulatory framework. Right? Now, this is going to be the most substantial overhaul, I'd say, of regulation in Jamaica's history, certainly in the financial services sector. And there are many who have gone before us. And so we have the benefit of being late to the party, so to speak, and we have the benefit of being able to look through 30 years plus of learnings with respect to the implementation of Twin Peaks, right? So I'm going to talk a little bit about some key things that we need to do and some key things that we need to avoid to ensure that the implementation of this regulatory model does not impede the financial services sector, particularly in the context of where we are with respect to our growth cycle as a country, and the necessary role that, in particular, non-banking entities need to play in driving that growth or facilitating that growth, right? So some of the features of the model are clearer division of responsibilities. Right? So there's focus on the prudential side, and there's a separate focus on the conduct side of things, right? Which is set out in number 2. Right? Each regulator has a core mandate. There is stronger consumer protection, which is important in trying to encourage broader participation in the investing landscape in particular. It's going to be important for people to know that there are agencies focused on safeguarding them, not only with respect to financial strength and so on, but also conduct. It's anticipated that the consolidated view that will come from this, from a prudential perspective, will serve to further enhance our financial stability, and speaking now broadly to the financial services sector. And we expect that to bring improved market confidence. Right? An important feature will need to be that the implementation of this model helps to facilitate innovation. Right? And it says there, clear and supportive regulatory environments to enable the development of new financial products. The fact is that many segments of our financial services sector is in its nascent stages. And there's a lot of work to be done. We've made a whole host of progress, particularly over the last 10 years. But there are many things that we're just getting around to. Consequently, we will need a regulatory environment that is very mindful of that fact and is willing and able to grow and change with us as the financial services sector. Speaking now from my own perspective, us as securities dealers, as we innovate. Finally, the adoption of the model in the right way aligns with the regulatory framework that exists in many developed markets, and we believe this will enhance our overarching reputation as a financial services hub, right? Which is an objective of ours, a strategic objective as a country. So let me close out the discussion around Twin Peaks by speaking about some important considerations to ensure the continued viability, and not only viability, but vibrance of the capital markets. Right? So let me take you across the very busy slide. So 30 years is not a very long time from a regulatory perspective. Right? So certainly a long time for me, it's most of my life. Right? But despite having 11 different economies who have implemented this, it still feels kind of new. Right? So there are some pitfalls that we really need to try and avoid. So the first is a clear difference in role between the two regulators. There is a temptation almost for there to be some overlap with respect to both regulators, even when a Twin Peaks model is in place. So it's going to be critical to stratify the two. Right? There will also need to be a bridge built between the two regulators to ensure that there are clear mechanisms for them to collaborate. Right? The next point is the institutional challenges in transition. Right? So key challenges will need to be managed. Things like the risk of over-regulation or duplication, things like specific expertise gaps. We will need to ensure that we plug those. Right? The third point is that we need to be innovative and flexible, or we need to build that almost into the model. Right? So best practice initiatives for countries who have implemented this, for example, have included ensuring that there is a dedicated focus on innovation. So the Netherlands has an innovative hub, for example, or innovation hub that supports financial innovation while maintaining effective supervision, which is the key. The final 2 points relate to resilience through the adoption of this model. So Twin Peaks must be adaptable in order to survive systemic risks. It needs to take into account the idiosyncrasies of Jamaica. We can't put in place an out-of-the-box solution. It needs to be fit for purpose, or it won't work. And there needs to be effective coordination between all the stakeholders. So let me talk now about some current economic dynamics and the investment implications of SAIL. I got the time check, so I'm getting there. So I have a quote here from John Bowman, who is the CEO of the Chartered Alternative Investment Association, right, of which I'm a member. He said, as we step into 2025, we're focused on helping you navigate the great convergence, which is a transformational shift that's reshaping business models and investment processes. And that great convergence has been going on for a while, and it has actually made its way here to Jamaica. And there's a lot more of it to happen over the next several years if we are to fuel growth and create that transformational investment opportunity that I mentioned. So what's the great convergence between public and private markets? In the wake of the global financial crisis between 2007 and 2009, new regulations were introduced, and they effectively tightened the ability of the traditional financial sector to intermediate. Right? It effectively tightened the ability of banks to lend, in essence. And born out of that was a significant expansion of private markets. Today, the non-bank financial intermediation sector stands at over $1.5 trillion. And S&P Global Markets says that there is essentially convergence that has started to happen between a non-banking financial sector and the banking sector. They're collaborating on the same kinds of transactions. They are lending to one party while the bank is lending to another in order to enable transactions. Right? And we're seeing that convergence happen locally as well, with the government programmatically deleveraging itself. What we've been calling crowding in the market. They've essentially been pulling back from borrowing. It's created a lot of capacity, and whereas that capacity gone, it has gone into private markets, certainly. There has been an exponential growth in the amount of corporate debt securities that have been issued in Jamaica over the last 10 years. It's also gone into public markets. The stock exchange has the data. So that confluence and convergence enabled by the government stepping back as a borrower has created this set of opportunities for us. Now, how do I link this to what I spoke about before, which is the change in regulation? Well, with the impending changes to be brought on by Basel III implementation and Twin Peaks, it is particularly important to ensure that we don't stymie the continued growth of both private and public markets. It's critically important to ensure that market participants remain capable to be intermediaries to originate investment opportunities and so on, even with the implementation of these regulatory strictures. All right, and where are the opportunities? The opportunities span private equity, which is in its very nascent stages here, and therefore needs enabling factors to grow and develop. Private credit, which is emerging further along the spectrum than private equity, but still emerging. Private-public partnerships, right, or public-private partnerships rather. We have an exceptional framework that has been set up for PPPs, but we haven't been doing enough. And again, we need to ensure that market participants are capable to do these kind of things. Speaking of PPPs, and that might be the ultimate point in the presentation, they are critical to accelerate infrastructure development. The fact is that the government has created a lot of capacity, but that capacity is not going to be directed to government spending. Instead, the capacity is a backstop to ensure that Jamaica is resilient in the face of challenges. We're still a small, open economy. We experience significant climate risk, right? And we are very susceptible to exogenous shocks. So the government really, having created this capacity, can't quite spend it. Right? So it's going to be critically important for there to be collaboration between the public sector and the private sector in driving the necessary investment to bring us along the spectrum with respect to infrastructure as an example, right? And we've seen very good local examples, right? Terminating with the listing on the stock exchange. Trans-Jamaica is one. The government would have taken on that project by themselves and ultimately stabilized it and de-risked it by listing on the stock exchange. Wigton Wind Farm is another. Right? And those are examples of what is possible if the private and public sector collaborate. So it will be critical for not only driving local participation, but also creating opportunities that can attract foreign direct investments. People are looking for these kind of assets all over the world. There has been a compression in the return on infrastructure in the developed world. Therefore, if we are to put together these kind of opportunities here, the foreign dollars will come. So let me bring it all together, finance time. So Dale Carnegie has said, when he's speaking, you should tell them what's going on, or rather tell them what you're going to tell them. Tell them, and then tell them what you have told them. Right? So I'm at the last stage of that, to tell you what I've told you. So the first is, just to reiterate, that the robust institutional framework, that has been created has set up Jamaica to be a mecca for investments, right? It's critical to make money sustainably. The second is that the great convergence that has been taking place for the last almost 20 years has made its way to Jamaica. And the difference between private and public markets are becoming less and less noticeable. There is great collaboration between the endowments of private markets and public markets, and it presents a tremendous opportunity to scale that collaboration. And the third thing is, which is a conclusion, which I hope wasn't lost on you all, is that Jamaica remains an excellent bet for deserving investors. And where are the opportunities? The opportunities really center around pointing capital in the direction of driving economic growth, having been well set up to do so by the institutional frameworks that I just spoke about. I think that's it. Thank you very much.
Just one question for you, Raman, before you go. Given our healthy fiscal status or strong governance, as you mentioned with the Twin Peaks, low unemployment, low inflation, interest rates coming down, why is growth eluding us? Why is sustained double-digit growth eluding us?
It's a very good question, right? Maybe I should come and borrow the mic. It's a good question, and it's one many have tried to answer. I can give you my own perspective on the answer, right? So growth isn't incidental. Economic growth isn't incidental. It's very deliberate, right? And it requires, it's very busy work, right? It requires heavy action on the part of all stakeholders. So that's the crux of the argument that I just made. It's like a chicken and egg situation. Investment opportunities are born out of growth. And I believe the nature of the investment opportunities that exist in Jamaica, by extension, can fuel growth. So in other words, I think what is necessary is a focused agenda on bringing Jamaica forward, all aspects of Jamaica, whether it's infrastructure, whether it's technology, whether it's processes, so on and so forth. To the extent that that focus comes into play, and there is the necessary collaboration around that, whether it's between the government and local players, or the government, local players, and international players. Once that capital starts to go to work, the investment returns that will be born out of those projects will translate to growth, will translate to even more employment, higher quality employment, will translate to spending, will translate to value creation. So I believe the key component that has been missing is really a broadening of the investing and investment landscape. That's what I think it has been missing.
Okay, thank you very much. Thank you, Raman Small, for presenting. Excellent, comprehensive presentation. All right, we're a little behind time, so we're going to move along very quickly. And I'm going to ask, the next session is on the impact, the very important subject of the impact of artificial intelligence on the job market. And our moderator will be Christopher Record, consultant and advisor and tech entrepreneur. Please welcome Chris.
Morning, ladies and gentlemen. Thank you all for choosing to be here this morning. I'm sure there's a lot of other places that you could have been. Thanks, Andre, for the introduction. Artificial intelligence, since its inception in the 1950s, has experienced waves of optimism and skepticism. We're in the third boom. The first boom in the 50s. The second boom was approximately in the 80s, and this is the third boom. A lot of people think that this is the first time we're talking about AI. No, it's not. So we have someone here to help us to understand this topic. Globally recognized authority on AI, technology investor and founder of Intellibus, one of the fastest growing software firms in the United States, a pioneer in ethical AI and digital government, Ed Wattal. Ed has led groundbreaking initiatives through the World Digital Governance, which he may give us a whisper and talk about, addressing the societal and regulatory challenges of AI. With extensive experience advising global leaders and teaching at NYU and Stanford, Ed brings a unique perspective on the intersection of technology, ethics, and economic transformation. Please help me welcome Ed Wattal to the Wattal stage. Also asking for another mic. We can bring another mic up, please. So while the other mic comes, let me just grab that one there, that mic over that side. So, okay, this should be working. All right, we need two working mics. All right, so let's just get the show on the road. And from your perspective, if you could just give us an idea, just to start off the discussion, a definition of artificial intelligence and what it means from your standpoint.
Hello, yeah, can you hear us? Yes. Okay, perfect. Yeah, so thank you, Chris. So how many of us have heard about AI? I'd be surprised if anybody said no. Okay, all right. So what does AI mean to any of you? And I'm going to give a slight incident that happened to me. I was traveling to India. I was born and raised in India, American citizen, now live in the US for the last 20 plus years. So it was, I actually went back after a decade. So a lot of things in India were new. It was pretty, that hometown that I grew up on completely changed. And it was not because of AI. But what was most interesting was that I went, my parents have a washer dryer that they haven't replaced in 20 years. So I was like, okay, you got to get rid of this. So I went to a store to buy it. Obviously, the person there doesn't know that I teach AI and run an AI company. And he tries to sell me a Samsung washing machine, says, hey, you got to buy this. This has AI in it. So it was very amusing to me when he said that, and it was, and that made me realize, what's the definition of AI? How's it changed? And definition of cloud, you don't think about the rain anymore. You think about, your data. So words define culture. Sometimes we invent words, and sometimes words that shape our lives, and the meaning of those words change. And AI, historically, people meant just better predictive analytics, machine learning, deep learning. Now we've come with Gen AI. And a lot of people will think of anything robotic also as AI. So you think of AI, think of that broad definition of AI, everything all the way from historical statistics and better math and predictive analytics down to Gen AI, which is agentic in nature, and we'll talk about that. We'll talk about jobs, all the way down to even robotic automation. So some people will use AI as an overall holistic term. So.
Fantastic, thank you very much. So the World Economic Forum recently released its biannual Future of Jobs report. And in that report, one of the sections, of course, was technology and digital related. Technology related roles are the fastest growing jobs in percentage terms, including big data specialists, fintech engineers, AI and machine learning, clerical and secretarial workers, including cashiers, ticket clerks, and admin assistants, and executive secretaries are expected to see the biggest decline. Give us your perspective on AI affecting employment.
So it's a great question. Employment, we all obviously want employment. We also heard the term unemployment, and we talk about unemployment. And in my head, these are two actually different things, while they may seem like heads and tails, two sides of the same coin. So when I think about jobs, I think about employment and unemployment. And employment, very simplistically, is do you have the right job? Do you have a job, right? And what job do you have? And if you think about how AI is impacting employment, and you think of all the jobs in your company, all the roles that you have, and if you're an entrepreneur, you are in a job, or you're working in a company, you think of the individual and your business, both lenses. And really, AI is, some people will say, just automation, just making things automated. So there's concern, oh, we're going to automate, my job's going to go away. That's one lens around employment. And then the other lens is AI is also self-service. So, you don't need a person. Think of, back in the day you had a teller, now you have an ATM. And automation happened first. Somebody first invented a tiny counting machine that sat next to the teller. Before, it was stuck with a screen, a TV screen, and put in front of the bank. So think of automation happens first, almost somebody improves the process, and then becomes self-service. But then the question is, what does it mean to your business? Think of two lenses. Automation, the whole idea, and self-service, the whole idea is to improve productivity. We had the JSE chairman yesterday talking about productivity and how productivity is being low. So obviously automation will improve productivity, but also we had heard the finance minister earlier. I had the pleasure to listen to her. Amazing. She talked about possibility. Dream big. She said, create the big companies. We want the big companies. I'm sure the JSE here wants big companies. So how many unicorns has Jamaica produced so far? We produced Bob Marley. Anybody, Bob Marley fans here in the room?
As always.
All right. Not many unicorns, but there's a fun fact for those of us who don't know. Jamaican British people created a company, Marshmallow, which was a unicorn. So we have something to feel proud about. They were born here in Jamaica, these two founders. But then I would love to see the day where Jamaica can produce that. And I think that's the core question. It's beyond productivity, beyond automation, beyond self-service. What's the possibility that you can create in your economy?
So in an interview with Ralston Hyman, who's outside, we debated employment and unemployment. And the discussion we had, still connected to the Future of Jobs report, was around the sectors of jobs. I argued that Jamaican workers, for especially blue collar workers, don't need to be worried for right now. The plumbers, the electricians, the folks who are using their hands, because until we get AI to that super intelligence level of AI, those jobs are safe. What are your thoughts around the sectors that we need to start thinking about, and how do we think about it?
I think a couple of things. Again, think productivity and possibilities. So you have existing sectors within the economy. You have food, you want self-sustenance, you want better agriculture within the economy. So obviously you can apply AI to all that. And now think of productivity versus possibility. Creating possibilities in an industry that you're not necessarily leading is harder. For example, if you wanted to be, think of how do you improve crop yields, and you're going to get into seed research. You have the University of West Indies, maybe they're doing nuclear power plants. So its possibilities are possible, but then it's probably a longer road. The question is, within what time horizon, what value you want to create within the economy. And so if you want to create value within a shorter time frame, then you're thinking, yes, possibilities for the long term. So what are those sectors? We heard the energy was a concern yesterday. And so obviously, what can you do? Service sector seems like a no-brainer. Again, I'm talking possibility more than productivity. Productivity, I'm sure you have plenty of experts here in the room who'll tell you how to do it better, faster, and cheaper. But think of possibility. And possibility really, if we talk about BPO, being one of the things, 60,000 people in Jamaica are employed in BPO, which is about 4.5% of total 1.3 million employed population in the country. How do we up that? How many people should or could potentially be given the University of West Indies and all the vibrant ecosystem we have be in the tech sector? How many? So we have 130 graduates that graduate out of the computer science program at the University of West Indies every year. How many of them actually have been pursuing entrepreneurism to create a company? Is there a program that naturally lends to that? And how many of those people are actually getting higher paid jobs? How many of them actually become a software architect, for example, versus just taking a lower end software engineering job that's getting outsourced in the economy because they think it's not good enough for them to do it in the first place.
Excellent, thank you very much. So as you were saying that a while ago, when you asked the question about Jamaica, producing the next unicorn, I took a glance to my National AI Task Force report, which our former minister responsible for digital transformation, who's now the Minister of Education, had constituted a group mixed with technology folks, government folks, people from academia. And one of the areas that we had looked at was some recommendations around economic growth. And I'll just quote here, short term, create the ecosystem through collaboration with universities to support the virtual and eventual physical establishment of AI hubs and tech parks in a bid to support AI-driven startups. Now I know that you have a course specifically around AI. I don't know if you could give us a little idea whether what you teach in that course and your target audience, and how we could learn from that.
Sure, yeah. The course is available obviously online. We're launching an online-only version, so you don't have to travel all the way to New York. Otherwise, it's taught at the New York University. At NYU, we teach 2 times a year. Potentially, we're going to do more of that. We also do satellite events, where half-a-day events, where in collaboration with WeWork, which you might be familiar with, it's a co-working company like Regis. So we partner with them and host events. So you're welcome to attend one of those events. Those are opportunities to not only learn from the NYU faculty like myself, but also from broader ecosystem. So you bring in, existing practitioners from the industry, experts, former general from the U.S. Army who's been running AI for the Army, for example, or the people from the CIA where, obviously they're doing cutting edge AI, you can imagine. So we get experts like that in the room, and you can come and learn from whatever's happening there, and how do you apply to business.
So there was a person here recently from I think it was Stanford, having a discussion with businesses, and he created a model with respect to, how deep do you go in automation, so the human versus AI balance. So in terms of that, job of the AI versus job of the human, is there a framework, an idea, and a thought you have around that balance?
So it's an excellent question. What's the job of the human? And how many of us are actually working in a job here, or entrepreneurs, business owners? I think everybody, right? How many of us are doing that so that they can retire and have a lot of money? Be honest. Okay. All right. So the job of the human, at the end, we all want freedom. We want to be out of the job. Actually, we want to get retired. We want to make the money, so we can just do whatever we actually want to do. So it's a foundational question, what is the right job? Because even when you retire, how many people are in retirement? Some of them are. And they then go and pursue a second career, a third career, like we heard about the Minister of Finance. She was in industry and now she's pursuing a second career, so to speak, right, in another job. So what is the right job for you? Sometimes you don't even realize it, you go through your whole life, only to realize, oh, what was I doing? Somebody told me to do this. So are you in the right job is the first question. Right? And then if you understand that really well, then the rest follows from there. And then the job of AI is basically to do all the stupid stuff you don't want to do, or all the other stuff that you're doing because it's a job. How many of us get into a job, it's like, oh God, I hate this job. Oh God, I don't want to do this stuff. So in every job that you do, there's stuff you hate, you just don't want to do, and there's stuff you really enjoy. So think of all the stuff that you hate, you don't want to do. Just give it away. It's not going to take your job away, it's going to make you happier, it's going to make your life better. And then do all the stuff that you meaningfully want to pursue. And what those are varies from person to person.
So in answering that, one thing that popped in my mind is ChatGPT is not AI alone. ChatGPT is a small component of what the vast world of AI is all about. And you briefly mentioned BPO industry, and on various talk shows and various media articles, I've seen the worry and concern that, the chatbots are going to take over the jobs of BPO. In your understanding, knowing that BPO is important in Jamaica, how does AI play with BPO?
So
business process outsourcing industry, yes.
Yeah, so BPO, now think of, yes, BPO jobs will be impacted, are being impacted, and a lot of call center organizations are worried. So on the one side, think of historically, if you wanted to do outbound calls, think of a simple example in BPO. I'm just going to take calls. So you can have the BPO, for those of us who are not familiar, has a set of sectors within it. Calling and call center agents is a big chunk of that, both inbound, when you make calls within a company's 800 number and you have to answer them, outbound, where you make sales calls to prospective clients or for resolving an issue, support and service, technical support, whenever you have a problem with your provider, you call them. Also, there's finance and bookkeeping and accounts and payroll, all those activities, and there's a lot more to it. But really, the most impacted jobs would be the jobs of any job title that ends with the word agent is more likely to be. And the important point here is that think of the role of the job of, earlier you asked the question, Chris, on the job of human versus the AI. So think of what are we offloading to AI? We are offloading agency to AI. Agency is, hey, can you do this for me? And the AI is going to do some action for you. And then there's a higher order of agency, which is decision making. Can AI take a decision for you? So asking AI to go do some research for you and tell you what shoes to buy, versus then asking AI to make the decision, buy the shoe for you. Two different orders of agency. So the question is, what's that order of agency? And so if the roles that you have in the BPO, you should think from that perspective, what agency do you provide? Is it just research versus is it decision making? The higher order agency is less likely to go away because people will still want to take their own decisions.
So recently, one of Jamaica's largest BPO organizations, ITIL, and its founder was actually on the National AI Task Force. They kind of took matters in their own hand, and they decided that they're going to leverage AI to create, for want of a better word, super agents. So, in very similar to what you explained, they look through the organization to try to figure out what are some of these repetitive tasks that I have to do over and over again that is massively important. I have to submit these reports at the end of every week to the various customers globally. And so they brought in a technology developer to build out AI support for all of that. That a lot of these reports that would normally happen in weeks now take minutes. And that agent is now able to respond way quicker to a customer's query and concern, and more importantly, to the bigger customer, giving the end of their reports, end of week reports instantly. With something like that happening for BPO, what are your thoughts around? You mentioned agriculture, but really and truly, Jamaica, we still have an agriculture industry. What would you suggest around AI for agriculture?
So, AI for agriculture, again, think of the two areas you can apply, productivity and possibility. So the possibility we talked about, universities could do research programs, or if you had a very large agriculture company, and I'm saying, billions of dollars in revenue, then that company could invest in R&D and create, better genetic makeups of, crops and seeds that provide better yield. If you were to look at the productivity side of things, think of the loss that you have. Are you overspraying within your field and using more spray that you need to? Are you spraying the right plants for the right reasons? And that all goes back to the concept of precision. And the concept of precision is what really AI allows you to do. Think of like surgeries, right? How many of us have had to go through a surgery, and we know the success rates in surgeries, right? Things can go wrong. And think of robotic surgeries. How many of us had laser for their eyes, right? It's robotic in nature, and largely any robotic surgery is more efficient, more accurate. And the same goes in agriculture. Think of the precision. And think of precision in three categories, whether it's healthcare or it's agriculture or any industry. There's spatial precision. So you're spraying, the pesticide at the right place on the right plants instead of spraying the entire field. You're spraying the 5 plants that need it. There is temporal precision. You're spraying at the right time. You do it at the wrong time, then you overspraying, right? And then there's genetic precision. Are you spraying the right pesticide that's relevant for the plant? So if you think in those terms, you can probably optimize productivity and possibilities.
Thank you very much. So we've got the 2-minute wrap-up signal. So we have, again, we heard the last question from Andre with respect to growth in the economy and the continuous discussion about productivity and how do we take productivity to the next level. So manufacturing industries, what would you suggest to any of the manufacturers here around their use for AI?
So manufacturing industry, I would say there's both dimensions. There are certain jobs which are obviously automatable by robotics, but then that's a capital investment. There are certain other supervisory jobs which are automatable. For example, you may have one supervisor across 10 people versus 100 people. So really thinking of, you talked about the super agent. So really within manufacturing, the productivity is more about how can one agent manage more agents versus the possibilities obviously are more capital intensive in nature.
Fantastic. So before we go, in my introduction of you, your organization, you're the founder of Intellibus. Could you kind of give us a little bit of you're not here to sell, but tell us about Intellibus, and of course, tell us about that other project.
Yeah, I think, why should you care about Intellibus? Don't care about it, just because I'm here. But you want to think about the word Intellibus, where did it come from? And maybe that's something you want to care about. I coined that term just out of sitting on the road outside my garage one day. The company wasn't formed at that time. I was teaching at NYU, and the idea that dawned on me, there's just too much software. And obviously, I wanted to build a business and do more in my life, but it seemed just terrible to make more software. There's too much software already, and there's too much data already. It just didn't seem meaningful. So, but I wanted to build a platform because, obviously platforms are sustainable and they stay over a long period of time. So what dawned in my head is that, you want to make the business intelligent. So I thought of how do you create intelligent business platforms? So that's the, that's the short answer to all of us. Some people think it's about creating an intelligent bus that drives around, but it's not.
So you're heading to Switzerland right after this to present at the United Nations.
Yes.
Give us a
I am not at liberty to talk about that until I reach Geneva, but I would just say, in a few weeks, we'll be launching the initiative officially. We are announcing it next week in Geneva at the UN. It's called World Digital Governance. So it's about the whole world, all 8 billion people. It's about digital, which is data, plus AI, plus assets. Think virtual assets, cryptography, NFTs, tokens. And then about governance, which is making sure that you have the right custodians for the data, making sure that you have a right utility which protects your data, and making sure that you have a community that can oversee all this. But most importantly, it's about the sovereignty of the individual you. The bottom line is you should own your data. You don't own the digital you today. If you didn't own the physical you would be I wouldn't fill that word. You can imagine what that means. So the digital you is not owned by you. God forbid any of us here in the room was to pass away. Your digital you will be lost in ether space, and your digital will and legacy will forever remain in the cloud.
So we have a lot of business folks, of course, a lot of financial services industry. So before we step off the stage, could you just suggest one thing that these folks need to consider or do or take action right now around AI?
I think the most important action to take is to educate yourself. I'm the so-called AI expert. I every day discover new things, and there's just infinite amount that's out there. So obviously it's easy to get lost. The people who talk to you about algorithms and models and agentic AI and frameworks and platforms, and every day there's an AI startup, or maybe 10 AI startups in every city being formed. So it's easy to get lost in all that noise. I would say educate yourself. There are forums like what we're doing at NYU. We've been in conversations with the University of West Indies. Diane, I don't know if you're here in the room. Please raise your hand. If you are, there you are. Talk to Diane. She's collaborating very closely with us. So she's going to be our point person here in Jamaica. So reach out to her. I would definitely finish that.
And thank you very, very much, ladies and gentlemen. Please, thank you. Andre, do we have questions, or we can take one question? Anyone has a burning question? There are 2 mics here around artificial intelligence. Anyone? Bueller? Okay, there's one. Mike. It's on.
Okay, it's on? Okay. Keith Collister. Quick question. There is a view that AI will allow professionals in particular, one is that it will make professional expertise less meaningful, because you can go and use AI. And another view is it seems to be attacking particular segments of the job market, such as journalism and so on. Where do you come down on? And there's another view that I think there's a Guyanese gentleman who may actually be at NYU who thinks that this is going to liberate us. Peter, the positive view, the Peter Drucker view of the world, where a new model is coming. So where do you, is it all 3, or where do you have your own alternative view for on this?
I do have an idealistic view, which I can talk about after the UN meeting, but very short answer to your question is professionals are not going away. They're going to stay. Those jobs are going to stay. That's my sort of short-term view. Very long-term view, nobody knows. And the answer, very simply, and maybe you can think about it like this: what's the job of the professional? If the job of the professional is to provide answers, then those jobs are going away. If the job of the professional is to ask the right questions, those jobs stay here forever.
Good summary. Good point to end on. Thank you very, very much. Excellent end. Thanks, Andre.
much, gentlemen. Very interesting topic. We could talk a whole day about artificial intelligence and its effect on our businesses. Certainly, the Jamaica Stock Exchange has an intimate interest in that topic, and we will certainly be looking forward to working with Dan to educate our own team and our constituents on the topic, so that is coming this quarter, 2025. Okay, we're now going to take it's scheduled for a 30-minute break, but we'll take a 15-minute working break, just so that we can catch up a little bit. So we'll be back here in approximately, I'll say 11:50, 11:55 there. Thank you very much. Refresh yourselves and be back. We'll have a panel discussion on investor education and its role in wealth creation. Thank you.
Thank you so much for joining us. Join us again in another 15 minutes.